José Pellicer, you are Head of Investment Strategy at M&G Real Estate. Thank you for joining us on BiTV.
Thank you so much for having me.
M&G's Global Real Estate Outlook report indicates that the implementation of global COVID-19 vaccination programs have led to a shift from a previously cautious investment approach to a release of pent-up demand. How could this new trend impact real estate investments going forward?
Okay, so from an economic point of view, the vast majority of European and French population are eager to party. They've accumulated savings during this period, and therefore there will be a rise in consumer spending. As soon as restrictions are lifted, there will be demand for leisure, for retail, for shopping, for travel, etc. So from a real estate investment perspective, this opens up a number of sectors that would have been a little bit too risky to address or to tackle during the pandemic. For example, hospitality, for example, student accommodation, for example, even some areas of retail. I think that 2021 to a point, but 2022 largely will be a period where we will see more risk taking in Europe to take advantage of the economic recovery.
Okay. And one thing that becomes clear reading the report is that not all real estate asset classes will be equally benefiting from this economic recovery. How will these trends influence investor allocations?
Okay, so before in the previous recovery during the global financial crisis or after the global financial crisis, the recovery was a bit different. So the issue were banks, right? And it was very hard to get financing for assets that entailed a little bit of risk. Now it's different. Now banks are very eager to lend for assets that are low risk. Yeah. So, however, some sectors in the real estate industry are still challenging. The main sector is shopping centers. So it is very easy to find financing for industrial. It is very easy to find financing for CBD offices, but shopping centers is much harder. So the question to me is how is to understand what shopping centers will be sustainable and will be still shopping centers 20 years from now, and what shopping centers will not. And I think that is the key. The other key point is that there will be, over the next 10 years, a rotation towards alternatives. So there is a lot more investor demand of residential, data centers, student accommodation, and even potentially medical offices, life sciences, which are not a sector on its own in Europe, whilst they are in the US. So that big rotation will create opportunities, but will also create risks, because some of those sectors are not as liquid, and therefore I think that many will get their fingers burned just by doing alternatives for the sake of doing alternatives.
Okay, I understand. And therefore, we talked about the sectors. If we take the subject from a geographic point of view, in Europe, what real estate markets do you see leading the recovery? What can we expect also in France?
Okay, so from a geographical perspective, you've got Northern European countries probably leading the recovery before Southern European. The reason is that countries like Germany, the Netherlands, the Nordics are exporting economies that will benefit from, number one, the earlier recovery of Asia and China, And number two, the big stimulus package in the US.
Mm.
So that's music to the Germans' ears, right? Now, countries in Southern Europe who are more exposed to tourism, hospitality, and travel, those will take a bit longer.
Mm.
So take France. France, we shouldn't forget that it's not in Southern Europe, but France is the biggest tourism market in the world. It's bigger than Spain, it's bigger than the US. So the French economy is very much driven by tourism. So that puts France in the same league as Spain and Italy. The other important point about France, I think, is politics, which is highly polarized. This is not a political interview, but just to leave it there, that there is an election year, and that will create a lot of political polarization in France, depending on how the recovery goes. The other point about France is the supply. There is quite a lot of office supply in Paris right now. And throughout Europe, everybody is building sheds and warehouses like crazy. Now, everybody thinks that because of the rise of e-commerce, that's a good thing. And I do agree with the rise of e-commerce, but there is a point in which too much supply becomes a liability. So that's something worth taking into account on the industrial sector. And the final thing I wanted to say is about retail. There is some value in retail. And there is some value in retail in a country like France, where luckily a lot of the retail parks have a hypermarket, and therefore being food anchored is actually an advantage. So therefore, I think that France is not badly placed. It will take a little bit longer than Germany, the Netherlands, and the Nordics, but it's got a number of very good things about it in the retail sector. And as soon as tourism recovers, I think that France will be a perfect place to party.
Well, thank you very much. Thank you very much for this insight. And thank you all for joining us. See you soon on BiTV.